Here is the overview of today's gold market news. Gold market performance, trends, and technical outlook. Impact of the Federal Reserve's interest rate policy. Investor sentiments, central bank activities, geopolitics, and other factors influencing gold prices. Here is the latest update on the gold market performance, trends, and technical outlook. Gold recently broke above 2,626, reaching a high of 2,632 on Friday. This sets the stage for a test of resistance around the 20-day moving average at 2,644, which has recently converged with a downtrend line, creating a more significant resistance level. From Monday to Wednesday, the 20-day moving average and the downtrend line acted as resistance. If bearish momentum continues from Wednesday, gold may face resistance at this level and turn lower. If gold declines, the next key support level is the 78.6% Fibonacci retracement at 2,576, followed by a possible test of the recent swing low at 2,537. The descending trend channel suggests a risk of breaking 2,537, potentially targeting a price zone around 2,475 to 2,473. A declining ABCD pattern suggests an initial downside target at 2,475, where there is symmetry in price action. The 61.8% Fibonacci retracement at 2,473 also aligns with this target, making it a significant level. A rally above the weekly high of 2,664 would shift sentiment, pushing gold back above the 20-day moving average and trend line, signaling a potential bullish reversal. On the weekly chart, gold recently fell below the 20-week moving average, but is on track to close above it, indicating support and a bullish signal on the larger time frame. With gold at $2,583.55 per ounce, this could be a good buying opportunity. If prices rise, potential targets are the 5-day moving average of $2,629.88, Wednesday's high of $2,652.09, and further up to the weekly high of $2,664.48. Silver prices at $29.61 may also offer a buying opportunity. If prices increase, targets include the 5-day moving average of $30.106, yesterday's high of $30.596, and the weekly high of $30,753. Banking and finance service firm ING expects gold prices to average $2,760 was in 2025, up from $2,595, citing short to medium-term positive momentum for the precious metal. Moving on, let's look at the impact of the Federal Reserve's interest rate policy on gold prices. The Federal Reserve's decision to cut interest rates initially spurred a rebound in gold prices. However, the Federal Reserve's hawkish commentary regarding future rate cuts dampened investor sentiment, as the Federal Reserve signaled a less accommodative monetary policy path in 2025 due to persistent inflationary pressures. The focus on controlling inflation and its confidence in the U.S. economy led to expectations of a tighter monetary policy. This reduced demand for safe haven assets like gold, negatively impacting its outlook. The hawkish forecast on interest rates caused the U.S. dollar to surge and gold prices to drop. The dollar index reached a 2-year high, driven by expectations of higher interest rates, while gold prices fell 2% to their lowest level in a month. After the interest rate announcement, spot gold prices fell to $2,583.55 per ounce, and February gold futures closed at $2,596.91 per ounce. Similarly, silver prices dropped, with spot silver reaching $29.61 per ounce and March silver futures closing at $29.69 per ounce. The Federal Reserve's dot plot now projects 2 rate cuts in 2025, a revision from the 4 cuts previously expected, due to concerns about inflation driven by trade policies under President-elect Donald Trump, a stronger dollar, higher U.S. Treasury yields, and higher interest rates traditionally reduce demand for gold, as it becomes vulnerable to competition with higher yields for safe haven assets. In the longer term, it is anticipated that policies such as Trump's proposed tariffs and stricter immigration controls, which are expected to be inflationary, could limit the interest rate cuts, potentially strengthening the dollar and imposing headwinds on gold. Next, here's the latest on the investor sentiments, central bank activities, geopolitics, and other factors influencing gold prices. The drop in precious metals prices may lead to profit-taking by investors, but there is potential for gold to reach new highs. Gold's price rise has been influenced by factors such as economic uncertainty, inflation concerns, and shifts in investor sentiment, making it a safe haven asset during times of instability. Gold demand is expected to rise due to the upcoming Chinese Lunar New Year and India's wedding season, which traditionally boosts gold purchases and could contribute to a price surge. Non-traditional factors, particularly demand from central banks, such as People's Bank of China and geopolitical tensions, are expected to provide strong support for gold in 2025. China's central bank has resumed gold purchases, and demand from other countries, driven by concerns over geopolitical instability, such as the US-China trade tensions and the Russia-Ukraine war, is increasing. Geopolitical risks in 2025, along with the desire for foreign reserve diversification by central banks, create favorable conditions for gold. Central banks in emerging markets are increasing their gold reserves, driven by a desire to diversify foreign reserves and hedge against macroeconomic risks. Analysts expect that this demand will keep gold prices near record highs in 2025. Despite near-term challenges from a hawkish Federal Reserve policies and rising real yields, gold's structural support from central bank purchases and its role as a hedge against macro risks will continue to bolster its price. Cryptocurrencies like Bitcoin are increasingly viewed as competitors to gold as a store of value. However, skeptics argue that cryptocurrencies lack the stability of gold to be considered as a viable replacement to gold.